Welcome to CEO Money. I'm Michael Yorba. Thanks for joining us. I have Justin Farr-Jones, CEO of CreditSCRIPT, on the show with me today, coming to us from London. Justin, welcome to the show.
Thank you, Bill.
All right, my pleasure to have you on the show. Tell us a little bit about your previous experiences with direct lending, and you've been involved in this since 2004. Is that right?
Yeah, that's right. We kind of break the alternative lending timeline into two sort of distinct chapters. If you kind of rewind the story back to 2007, even a bit earlier, the only participants that are really operating in banks in lending are banks. And around 2007, you see the first participation of investment funds. And over the last 10 years, those investment funds have now deployed or have raised over $600 billion and are not banks. They're lending directly in the economy. So that's really the first chapter that I participated in. And then the second part, which is what CreditSCRIPT is focusing on, is what we call the digital lending chapter. That's really only been alive for 3 or 4 years now, but is growing at a tremendous rate. So that's a $50 billion lending market already, only in the matter of 5 years.
All right. Talk to me about, as you say, alternative lending 2.0.
So 2.0 is really characterized by kind of how our lives are changing, Bill. And that's ultimately about the customer journey. None of us really expects to go into a bank anymore to get a consumer loan. If you're a finance director of a small and medium-sized enterprise, you're also losing that relationship with the bank. So most of us expect to fill our forms online. Most of us expect for the credit decisions to be made very, very quickly because there's so much data out there about us, especially if we give permission to whoever's making the lending decision to access our transactional data. So as the customer journeys have changed, and as obviously the millennial generation have come to be the largest demographic in society, our behaviors are changing. And so obviously the fintechs have been one of the first companies and the first sectors to jump on that. And they've really followed the big tech companies into just redefining the customer journey. And in our view, that's why this part of the economy and the direct lending networks have been growing so quickly.
What kind of investors are you working with that will step into the 2.0 with you and step away from the 1.0, if you will?
Well, 1.0 is well established. I mean, it's the largest buyout and debt funds that you'll see participating there. That's your Blackstones, your KKRs, and Carlyles. 2.0 really is more a Silicon Valley, a more San Francisco story. We're seeing initially small platforms being called peer-to-peer. So that's really individuals, yourself lending to other individuals. But what happens, and what's happened in the US and especially in North America, is that institutions have now come into that space. So that's your wealth managers, pension funds, other institutional investors. And those are the clients that CreditSCRIPT is actually helping to understand that ecosystem. So, we're very strong on due diligence. We visit the platforms, understand the historical lending performance, and then really help the institutions cope with this explosion of data. Because in alternative lending 1.0, you could go and assess lending and credit risk in Excel. Now you have to do that using Python and advanced algorithms because the data sets are so huge.
I get it. All right. And you see that the investors, as I would agree with you, need to pay attention to this space because there's going to be more alternative lending as technology evolves and to allow it, is what I'm getting from this conversation.
That's right. I think if you look at the projections, we're probably at about $50 billion of loans issued globally. That's excluding China. But if we call that North America and Western Europe, we're at about 50 billion. I think Morgan Stanley is predicting this is a $250 billion market by 2025. And you can see all of the drivers are in place. The millennial population moving into the biggest demographic, the whole change that's going on in our expectation of consuming financial services, that's driving it. And then if you consider one other really important factor, the banks have been under pressure for 10 years. So there's actually been a withdrawal of lending by banks to consumers, to small businesses, and to smaller real estate developers. And that's where really the fintech and the non-banking financials have come in to plug that gap. And they're providing a really essential service in terms of getting that credit into the economy. And that additional credit is really what's keeping us, keeping our economies growing. Otherwise, we'd certainly be suffering from a credit contraction.
What are the problems you see for investors going forward?
In alternative finance, it's a difficult market to enter because you've got about 350 lending networks or lending platforms between the US and Canada and Western Europe. So, what we're doing at CreditSCRIPT is trying to simplify things. We're trying to provide a single institutional professional investor access point. So when you look at that total market, it's still relatively niche. So you want a single platform that you can allocate and see loans in consumer, SME, and real estate all on one platform. And then you can place your orders securely through that platform. That's an important function of ours. We're integrated to a number of lending networks globally. And then we provide the asset servicing and the custody, which is a hugely important part of that total value chain for a professional investor. So really simplifying it, Bill, to make sure it's accessible, and then you can get that additional yield or return on your portfolio.
You mentioned returns, and the kind of returns that are available to investors in alternative finance versus, say, regular bonds or high yield?
Yeah, I mean, we've had an era of very low interest rates, and that's really, made it a very interesting space. I think for a comparative high yield bond, you could easily pick up an additional 500 or 600 basis points of return. So that's an additional 5 or 6% more annualized than a regular high yield bond. And there's a little bit of there's no such thing as a free lunch. You've got a little bit of illiquidity, so you can't trade out of a portfolio of loans quickly. It'll take you probably 1 year to liquidate. We are trying to address that with a secondary market, and overall it's a good additional return for that slight illiquidity and slight complexity, because you've got large portfolios with a lot of data. But I think that's what CreditSCRIPT is trying to address, make it much more simple.
What are your goals, say, for the next 12 months for CreditSCRIPT?
Well, we've just concluded our first institutional mandate. That's for $100 million. It's focused on real estate loans in the United Kingdom. We're now moving on to our private beta. We'll be working with approximately 20 buy-side institutions, putting together different portfolios in consumer, SME, and real estate. And over the next, I'd say, 3 years, our goal is to hit $1 billion of loans purchased for our clients.
Got it. All right, Justin, thanks so much for being a guest as we move forward with your journey.
It's been my pleasure. Thanks for having me.
Thank you, Justin. You've been watching CEO Money with Michael Yoruba. Don't forget, like us on Facebook, follow us on Twitter, and subscribe to our YouTube channel.